Hi, I'm Alex. I'm a CPA with Stronghold Accounting. My background is auditing publicly traded companies. Now I help small businesses optimize their profits and cash position. And if you're an agency owner and you're looking to save deductions in 2025, you're in the right spot. This is your 2025 Tax Shield cheat sheet. We're going to talk about the top 15 tax deductions, starting with number one, vehicle expenses. If you're driving to networking events, client sites, running business errands, the IRS gives you 67 cents per business mile. That's over $8,000 if you're driving 12,000 business miles per year. And by the way, it does not need to be owned by the business. It can be under your personal name and you can still get the business deduction benefit. By the way, IRS doesn't track your deductions for you. It's up to you. So if you're missing these, like if you've recorded these on your personal, under your personal account and you haven't moved them over to your business ledger, your business QuickBooks, they could easily cost you $9,000 and $19,000. I've seen clients miss out on tens of thousands of deductions simply because they didn't know. Number two, client gifts. So if you're giving gifts to clients, you get a $25 deduction for gifts per client per year. Key point, if there are branded promotional items under $4 that are widely distributed, think pens, tote bags, these can qualify as fully deductible. So to maximize those benefits, focus on the low-cost items. Third on the list, home office. All of us are working from home nowadays. If you're a digital agency, you have your own dedicated workspace. So imagine your home office is 150 square feet out of your total 2,000 square feet. That's 7.5% of your rent, your mortgage interest, utilities, insurance, property taxes, HOA dues as a business deduction. Bonus, your direct home office expenses, think your desk, printer, supplies, 100% deductible. Keep these in mind. These can fall through the cracks so easily. Okay, number four, most, if not all of your marketing and ad expenses are deductible. Obviously, promotional materials, etc., that you're giving out. Number five, meals. So this is a big one. So the key distinction here is if you're meeting with a client, you're getting a 50% deductible. But if you're meeting as a company event with your employees, like team lunches, holiday parties, you're getting 100% deductible. Okay, number six, this one's huge. If you're going to networking events, conferences as a digital agency owner, you're meeting clients in person, maybe you're flying out to scope out some new business, flight, hotel bills, rental, local transportation costs, all fully deductible. Now, pro tip on this one here, sandwiching the weekend. So if you are flying for business on Friday and you continue personally throughout the weekend, you're having fun, and then on Monday you continue business, fly out Tuesday, that weekend, even though it was personal, becomes fully business deductible. It's called sandwiching the weekend. Take advantage of it. Huge, huge win there. Number seven, startup expenses. So I touched on this briefly. A lot of these are paid via the personal account. That does not mean you cannot deduct them through the business. You just got to get your accountant to do a manual journal entry in QuickBooks to capture these. You get up to $5,000 in startup costs and $5,000 in organizational costs in your first year. So that's market research, legal, accounting expenses, website setup, training, consulting. Number eight, content production. So cost to produce videos, myself making a video like this, the equipment is deductible. This also includes the expenses for freelancers, renting the equipment, buying the props, paying for editing, music, distribution, etc. Number nine, software subscriptions. If you're using Adobe Creative, Canva, Envato Elements, other design asset libraries, fully deductible for business purposes. Number 10, all of us are using our cell phones for client communication, right? So if you have a separate business phone, or even if you use your personal phone, the business portion of that personal phone, fully deductible. And then obviously your internet fees as well. We talked about that in the home office section. You get that 7.5% of your internet per month. Number 11, bank fees. So these can fall through the cracks if you don't keep an eye on them. So any of your payment processors, Stripe, PayPal, Square, fully deductible, monthly service charge. These fees can add up quickly, so track them in your books to avoid missing out. I mean, I've seen some of these processing fees can be, for some clients, $20,000 to $50,000 per month. So keep an eye on these. Number 12, education. got to consistently learn new things, right? Workshops, webinars, courses. If you're paying these with your personal credit card, remember, these are business deductions. Number 13, I think we're on, entity structure. Okay, this one's actually huge. So if you don't know if your tax is an S corporation or a sole proprietor, you should ask your accountant. All you got to ask is, hey, do I file as a Schedule C or an 1120S? If you're above 50,000 in net income and you're not an S corp, I don't know why that would be. There is maybe a very specific reason why, but 99% of the time you should be an S corporation because the tax savings outweigh the costs. So the difference can mean tens of thousands of dollars. We've had clients switch from their sole proprietor to an S corp and save $20,000 plus per year. This isn't just a one-time thing. This applies year after year of tax savings. I'm going to get into why in a different video, but just keeping this high level. Okay, the Augusta rule. This is actually named after the golf tournament in Georgia. So it allows you to rent your personal home to your business for up to 14 days per year and exclude that income completely from taxes. The business gets a deduction and you get the rent tax free. Now, you obviously you got to use it for business purposes. So off-site team retreats, strategy meetings, filming content. Pro tip, get a quote from an Airbnb local to you to justify the rate that you deduct. Obviously, if you get audited, you need to substantiate it. Okay, number 15, the last one here. So just because you paid a business expense out of your personal account does not eliminate it as a deduction. So in a perfect world, obviously we want to keep all business income and expenses through your business account because we don't want to pierce the corporate veil, which means a third party could sue you and they're saying, hey, he's mixing his personal account and his bank account. Therefore, I don't want to just sue the business. I want to go after his personal home. I want to go after his personal vehicle. That becomes a big risk. So we need to keep the two separate, but it doesn't mean if you paid out of your personal, it's the end of the world. There's a journal entry you can input into your QuickBooks. Ask your accountant about it, and you can capture those deductions. Okay, summing up, how do you actually document these expenses? Receipts, invoices, bills, loan documents. The IRS does not accept bank or credit card statements because it doesn't tell you what you actually bought, doesn't give you an itemized list. Okay, so next steps from here. Before meeting with your accountant, gather the deductions on this cheat sheet, write down some notes of what maybe you have missed out on in terms of deductions. This could literally mean the difference between $9,000 to $19,000 in cash savings in your pocket, not going to the IRS. And think about it, that's close to $100,000 over 5 years. Check out this chart we had for one client in terms of tax savings per year, $18,000 to $20,000 year over year. And that was a cumulative net savings of $96,000 over 5 years. If you were to invest that in your typical growth fund, call it $160,000 over 5 years. What could you do with $150,000? I'm going to end on the last note, which is a common misconception. Your tax preparer cares how much tax you owe. It is false. They typically only care that it's accurate and compliant. And that's just the nature of the business, right? I've prepped tax returns. There is a ton of tax returns that come at busy season, and you can only focus on the compliance aspect. You need to be looking into a tax planning, tax strategy engagement if you're looking to actually work throughout the year as opposed to wait at the end of the year to try to capture all of these deductions. If you're looking for expert guidance on this, we offer a tax shield program. By the way, if you want to print out a copy of this, you can go ahead and download the 2025 Tax Shield on the website, strongholdassociates.com. Just to recap, we've got 15 great deductions on our Tax Shield cheat sheet. These are going to save you $9,000 to $19,000. Again, my name's Alex with Stronghold Accounting. I've helped hundreds of business owners optimize their profit and cash position. Great sharing this with you today, and please tune into the channel for any other agency-related content. Thanks for watching.